What's important to remember is you don't overcome these challenges. What happens is you face them continually throughout your trading career. Hopefully you might face them less frequently because you are a better trader, but you still will not eradicate the stupid mistakes, the overconfidence, the losing control of yourself. The idea is as you become a better trader, you have better coping mechanisms.
Hey everyone, welcome back to the channel. My name is Dee and I've been trading futures professionally for about 10 years. Now, this video is a second episode of my Drink with Traders series where I casually interview traders who have piqued my interest and whose journey might be beneficial for all the rest of my market stalkers. So today I've invited James Thorpe, who is one of the founders of TradeDay. So he's back on this channel. James, welcome back.
Hi, thank you for having me. It's an absolute pleasure to be here, Dee.
Likewise, very, very good to see you again. Now, James, when you were here last, we were talking about TradeDay as kind of a way to introduce your company, and Steve Miley was there as well. And as we were talking, I kind of realized that you have this very deep understanding of what it really takes to become a consistently profitable day trader. So I kind of wanted to explore the trader side of you.
Sure.
James the trader, not just James the guy who builds massive prop desks around the world.
Okay, all right, yeah, no problem.
Yeah. So why don't we get back to the very beginning? So tell me, how did you actually get into day trading?
Well, I could tell you how it all really started for me, and it was actually I think I was about sort of 17 or 18 getting my hair cut, and picked up a copy of GQ, and there was an interview with a trader, I think it was called time stockbroker. I don't know how they quite described him, but the one thing I remember from that article is that on his lunchtime he'd gone out and spent £100 on a pair of socks. And I thought, oh, wow, that's so cool, to be in that position, to be able to spend that sort of money on a pair of socks, that's what I want. So that's kind of what piqued my interest. But, really, I didn't get going until, so I worked for a commercial bank straight out of college. And, I wanted to get into sort of trading and broking because I had that interest there. And what happened is in 1990, it was just before 1990, it was the world's largest retail futures brokerage group, a company called Lind Waldock, but they'd just opened a London footprint. So it's a very small office, 6 people in there. They were looking for people to, be trained up to be they called them order clerks. It's kind of like a brokerage role. And I managed to land a job with them. So that was in sort of like 1990. And I was with them for about 2 years before moving over to Cargill Investor Services, which is at the time a very large futures brokering, but on the institutional side, not on the retail side. So an institutional futures broker. It spun out of Cargill, which is at the time one of the world's largest privately owned companies. So they were handling around 70% of the world's food, whether it was farming or production, delivery, etc., all through the supply chain. And out of that had sprung up Cargill Investor Services, which was a brokerage group to hedge their risk in agricultural products. And but by this time they were doing financials and had broad spread of clients across hedge funds and banks. And so I moved over to Cargill. I was with them for about 2 years. But after 4 years broking, I was like, look, I kind of had enough of telling traders what my opinion was on the market and telling them what to do. And I wanted to be a trader, right? I wanted to be the person that puts on risk. So I transitioned then from broker to day trader on the live floor. In 1994, I made my first trade, April the 4th, I think it was, 1994.
Wow, long time ago.
So a long time ago.
Yeah, I think I was about 15 then. Yeah, so when you made that first trade, so in that first week, first month,
Yeah.
Did that just go like really well? Because I remember when I first got funded by a company, my first week was a total car crash. So
Yeah.
did they train you up? Were you completely
Yes.
ready?
Do you know, we actually didn't do much training. I mean, obviously we needed to be trained on how to execute trades in the pit, the hand signals and what to write on the cards, but my advice, the advice that was given to me on day one was just go in, try and make one trade and scratch. Scratch, for those that don't know, is you buy something at a price and try and sell it at the same price, and just for an instant get to feel what it's like to have a live trade on. There were no simulators back then, so it was kind of like you're just thrown in at the deep end. But obviously you want to be very careful with the risk that you're taking on, because and this hasn't changed today. Everybody has to go through this learning period of what it's like to trade real money. Even if they're successful on a simulator, they're going to underperform. Their results are going to drop off when they go live. And it's this sort of period of time you want to make as cheap as possible. You obviously want it as quickly as possible as well, but that depends on the amount of time you put in to trading and the sort of trader you are. But everybody's going to experience this drop off in performance. So what I like to think of it is, make it as cheap as possible. Trade the minimum amount of risk and just get used to trading like small positions. So for me, my first week wasn't a car crash, but it wasn't spectacular. It was like my first day I actually traded twice, bought one, sold one, scratched, bought one, sold one, made one tick, which was it was 25,000 lira, which is Italian lira, which at the exchange rate at the time was £12. And then after clearing fees and exchange fees, it was £6. So at the time, about $9 US. Today, about sort of $6 US. But that was it.
You did much better than I did. I managed to get myself back on the sim within that first week. Woo! So I wish somebody had given me that advice. Just go in, put one trade on and get out for scratch. That's like,
I mean, it's look, I was lucky enough to have a very good mentor, which we can talk about sort of later.
Yeah, definitely.
But that for me was, that was I was obviously went home buzzing. It's crazy to think about it. I made $6 and I went home buzzing. But my first day trading, I made money, and and of course you think every day from there you're going to make money, and very quickly you learn that you don't. And in fact, actually, just moving on from there a little bit, it took me that kind of like sim to funded. Well, it obviously wasn't sim, but that sort of drop off in performance when I went live, as I started to sort of lose money and make this sort of learning curve, was actually about 3 months. And, and I kind of, and I just wasn't making any money. My account, trading account, I think was down about, I don't know, it wasn't down much, maybe $1,000, maybe £600, $1,000. And but that was accumulation of sort of 3 months seat lease on the floor and some small trading wins and some small trading losses. I wasn't necessarily bleeding money through trading losses, just wasn't making any headway. And then an extraordinary thing happened. I just started to make, and I can't really put my finger on it why, like a couple of £100 a day, flat, make 100 flat. And then all of a sudden I went into this period where I made 1,000, almost like 5,000 over the course of the week. I think it was closer to 4 after commissions. It was like 1,000, 800, 1,000, sort of 700, like all added up over the course of the week. But it was making money every day, and it was almost like $1,000, £1,000 a day. And I remember thinking to myself, "Oh, I've cracked it." And then I remember getting a calculator out and thinking, okay, so there's 250 working days in the year. I'm probably going to be on holiday for 3 weeks, days off. I'll probably about trade for about 220 days, 220 times £1,000. Oh, wow, I'm going to make £220,000 this year. And of course, that wasn't the case. Even today, like 30 years later, I have to sort of stop myself from thinking, well, if I've made £1,000, I can make that. If I can make that every day, I'll make X. It's just like a habit. It's hard to break.
Yeah, I've gotten to a point where if I have like a 6-week streak where I haven't had any losses, I start to get suspicious. And I'm like, hold on a minute. This is because I look at it as an outlier, because I know that every so often there will be, maybe 3 days when I can't quite find a proper trade and I have to like censor myself. And I'm like, okay, maybe not trade too much today. But whenever I kind of go back to super profitability, I'm
Yeah.
almost skeptical. I'm like, what is going on? And then
Yeah.
I
What's around
kind
the
of
corner?
almost go on the other way. I kind of do less trades because I'm thinking this can't last for that long. So I'm
Yeah.
always aware of the fact that I'm outperforming my previous historic performance.
Yeah. I mean, I think that's a tough thing for traders to wrestle with is we call ourselves, when you've had a career of 15 years, like I did, which is full-time trading, you call yourself a consistent trader. And when you call yourself a day trader, there's this tendency to attach this belief that that's making money every day, it's simply not the case. And that's a hard thing for people to understand. And it's a hard people for traders to come to terms with, that they're going to go through, like you pointed there, periods of super profitability and think that, during those times that, I've cracked it, I'm invincible, I'm away to the races, I'm now going to be $1 million trader, only to get incredibly frustrated to spend the next month or 2 months or 6 weeks in periods of very low profitability, and that's just like the journey of the trader. And I think, I when I was doing a lot of coaching and educating when I was managing Mercury derivatives, we would talk to the new traders about this typical journey, that it wasn't going to be sort of a straight sort of linear progression. It was going to be very volatile, and it's difficult coping with those troughs, sometimes difficult coping with the peaks, but those swings from peaks to trough are psychologically very difficult and very frustrating, and I would try and put a positive spin on it and say, well, that's what makes trading really exciting, because it would be really boring if you made money every day. But the reality is, if you made money every day, you'd be super happy, right?
Yeah.
So I was only just trying to put a positive spin on what is the reality of trading. The reality of trading, it's super your growth is super volatile, your progression is super volatile, your emotions are super volatile, just like the markets are volatile.
I would definitely say that trading is uncomfortable. Like, even after all these years, like, I've been consistently profitable for over a decade now. But and yes, I mean, obviously I lose trades. It's not like I'm everyday profitable. If you take all of my good periods, bad periods, I probably am kind of hanging around 42 to 45% accuracy. But
Right.
I have had obviously extended weeks where I'm smashing it at like 82, 85% accuracy.
Yeah.
But that's not the reality of trading.
No.
And when the days come when you're not doing so well, that's when your skills should shine. I always say that to my guys as well, because I'm a mentor too. And some of them have an unrealistic expectation that now that I've conquered your method, now it's all going to be plain sailing. It's like, no, you're still going to have a day or 2 or 3, even a whole week when you're just not reading the market very well, or the market's not moving. Like, that can happen too. It doesn't have to be down to the trader. It can be that somebody, the institutions are waiting for something, like this week. We've had NFP, FOMC, everybody's waiting for that to come out, and then they start, doing active trading again. But to explain to people, hey, you have to be really emotionally resilient. And I've actually had somebody ask me, well, how do you develop emotional resilience? Well, you come across a challenge and you don't back away from it. You try and find a way out to the best of your ability. And that's what builds emotional resilience. It's not like, oh yeah, I was just born emotionally resilient.
Yeah. I mean, I think, it's a good, I think emotional resilience is a really good term, and something that, traders really have to sort of take on board. For me, emotional resilience, I think in some ways comes through just repeatedly going through that process of boom, peak and trough, and understanding, one, that you can recover from these more tough trading times, that it will get better, and actually having coping strategies around like risk management, how you're going to scale back your size and your trading until you get your consistency back, and then scale up, as opposed to doing the opposite, what most traders do, which is what, I've lost money, now I'm going to really go for it because I need to make these losses back. So you have these coping mechanisms, you have this understanding that you can get through it, but it's not to say that the insecurity and the doubt ever goes away, right? It's always
Exactly. It's
there.
always there. That's why I say trading is uncomfortable. So you have to get used to to get comfortable being uncomfortable, effectively.
Yeah.
And that's what every day is for us. It's not for everyone,
No.
because some people, they might look at us, what we do on a daily basis, and then we go, oh my God, that's my version of hell. But I like
Yeah.
the intellectual stimulation that I get from it. I like that no day is the same.
Yeah.
And I think one of the reasons why I've gone through so many years of being okay, even when I wasn't doing that well, is
Yeah.
because I focused on the process. I never focused on the results. Like,
Yeah.
for me, the results come as a result of a good process, not the other way around.
Yeah. Yeah. What you just said is incredibly important. And, in the conversations I have with my traders all the time, they're doing the opposite. They're focusing on the outcome, the P&L, and not on the process of good trading. I mean, it's just like, pick up from where I left off on my story, just to give your viewers and listeners an idea of how that played out. Did I make 220,000 in my first year? No. What happened is, at the end of that week, I stopped making money, and I didn't make money for another three months, I think it was. And I just couldn't understand what happened. In fact, it got to the point where I was offered a job as a broker. Somebody on the floor said, like, hey, you know what, we're looking for people, are you thinking about, you've been a local, I don't know how it's going. I was like, well, it's not going very well. I said, are you thinking about quitting, because we'd love to hire you back, I'd love to hire you. And I said, let me think about it. And I went and spoke to Gidon Hirschton, who was backing me, funding me as a trader, and said, I've been offered this job, what do you think? And he's like, I think you're about to get it. I'm watching the trading. It just takes time. It's a process. You're acquiring the skills. We have some evidence that you can make money. You went through a period where it was going well for you. This is the process. This is what it is. Just stick with it. And like within a few days after that, almost, I started to sort of make money again. And I can't remember, because it was 1994, what the exact numbers were. But I want to say it was about £30,000 I ended up making on the year that year. So it was a struggle the whole year. But over that time, it's a skill acquisition process. It's the building of the trading account, which gives you more of a cushion when things don't go so well for you. And you're just obviously trying to scale and grow from there.
Yeah, I remember when I was finally back from the sim onto the live account, I actually had a really good that month of comeback. And the company that I worked for was kind of like an old style model, almost like a cross between a hedge fund and a prop desk. So they were only paying us out 20% of the performance fees.
Right.
And
Wow.
there was like no negotiation. It was just like 20%. If there are profits, they're getting paid out. But then I think 70% of whatever was left would go towards your risk allowance and your buffer for the next month. So you could scale up really quickly. But I remember, after all of those fees and everything, and you pay your desk fee, which was like $3,000 or something crazy for a Bloomberg terminal. And I ended up getting paid like $525. And I was like, but I had a really good month. But I had 3 months of desk fees to recoup. So most of my profits went to that. And, it's just all of this stuff. You get super excited that suddenly you're going to become a millionaire overnight. And it just doesn't quite work out that way. So the sooner people realize that trading is just like any other business, that it takes time. You will start small. The profits will be small in the beginning, and you just have to build on that. You can't just jump and there you are. I mean, it's definitely not how it works.
No.
Now, James, tell me, when you were going through all of this, can you remember of any kind of particular strategy that suddenly was like an eye opener for you?
I was doing a lot. I mean, I was doing this type of trading you can't really do today. So I was trading around spreads and legging in and out, and a lot of that has been automated away from.
So arbitrage trading.
Yeah, well, it wasn't actually. It's a good question, because I wasn't arbitraging between two different markets. I was trading yield curves. So my primary product on the floor was the Euro Lira, which is not the FX currency. It's the Italian interest rate curve. And when the euro went away in '99, folded into the single European currency, the European currency, or the Eurozone, had its own interest rate curve called the Euribor. The one in London is called short sterling, and the one in the US is called Eurodollar. People sometimes get that confused with the Euro-dollar pair. FX there, but it's not. It's the interest rate curve. So I was trading those. And I was trading a lot of strategies around legging in and legging out of spreads, and that's a very manual process that relies on scalping for a very short term. And a lot of those type of trades aren't available to traders today, particularly retail traders at home. One, because they're very fee intensive. Because if you put you might put a multi-leg spread on and take the whole multi-leg spread off for a tick. So it's not that you buy one contract and selling one contract for a tick. You might be buying 4 contracts and selling 4 contracts for 1 tick, not 4 ticks. So the high cost of fees to the retail trader at home make it difficult, and also a lot of those trades are now automated, and it's sort of high frequency, low latency.
Yeah, they just take it all back into alignment really quickly without a manual trader even noticing there was a divergence.
Yeah, exactly. Very difficult to do. In fact, our broker TradeDay doesn't even list euro dollars because there's zero demand for it from the retail trading community. So so that was the type of trading I was doing. But so it's hard to sort of pinpoint any one strategy that would really help your audience or traders. But what I can talk about, if you like, is like certain days or certain things in my trading that kind of really defined me and really helped me. And obviously they're typically sort of big days, either big profitable days or big losing days, so perhaps if we can get onto that if you want.
Yeah, absolutely. Yeah,
I'll talk about my biggest losing day first, and I'll talk about the story of the losing day as much as I can recall it. I think it was around sort of 97, so I've been trading around 3 years, 96, 97, 2 or 3 years, and I'll tell you the story of it and sort of some of the lessons that I learned. So I was coming off a super hot streak that we talked about earlier, right? Trading confidence is at an all-time high. I'm used to probably on a good day making £2,000, on a bad day losing sort of £2,000, making 3 or 4 winning days a week and losing once. So maybe on a week I was making somewhere between £3,000 overall, after fees and things. So I was feeling really good about my trading. It was very consistent. I was thinking it was easy trading, that type of thing.
Famous last words, yeah.
Famous last words. And I never forget sort of like the period of the events that led up to it. So the market had been particularly busy for a couple of days, and I'd made a bit of money, but I was kicking myself because there were a couple of big moves that I had anticipated and I hadn't got on. And at the end of one particular day, the market had opened at the high, closed on the low on an extremely high volume, breaking a week's level of support. So technically an incredibly weak day, right? From a technical point of view. And I remember that evening being over the pub with actually Steve, my co-founder, and a couple of other friends, and just, having one too many drinks going, oh, the market is going to puke tomorrow. It's absolutely going to dump. I'm going to make a fortune. There's absolutely no way this market can hold up. I'm just determined to sort of have my biggest day ever. So I get into the pit a couple of minutes before the opening bell, get myself set, get my spot, get my cards, get my pen. I'm ready. And somebody shows a bid, someone's showing what we call showing a bid. Someone's looking to buy the Italian lira, and I'm looking to sell it, right? And it was a broker filling for Merrill Lynch at the time. And I remember thinking, I don't want to miss these. So I sold the entire amount, and it was like 50 lots or something. And I'm like, well, that's a fair trade, and let's say I sold it at 50, and someone comes in, where's bids? I'm like, I'm 47 bid, 3 ticks below, hoping they're going to hit me. And they go 50 bid. Okay. I'm like, well, I'm going to sell some more because this is too good to be true. Sold. Now I've got a 100 lot position on, which is kind of getting to my maximum amount of position that I was having at the time. And someone comes back in and it goes like 50 for 100. And then I paused and he went 51 bid. I'm like, well, if I liked it at 50, I love it at 51, that old line from Wall Street. Sold, and I did this like 3 or 4 times. I accumulated a position of 200 lots. And and the volume in the lira at the time, like, it could be like just 10 on the offer, 2 ticks away, 50 on the offer. So I immediately realized how vulnerable I was at this point, and that not only had I just sold, but I sold 3 or 4 times into people bidding the market, and not just people, banks, right? So I'm like,
some serious power there.
And before I had really chance to even process this thought, it was 2 bid, it was 3 bid. There were some locals in the pit that knew I was short. They were 4 bid, they were high ticking 5s, and the whole thing was squeezing against me. And I was just like panicking, and I'm like, I just had to cover it. And I paid like 56, 57, whatever it was. I can't remember the exact prices. I tried to spread it up on another month, and I may have even lost money on that leg. The whole thing was a mess, and I was just shaking and I couldn't control myself. And I just got flat, and I gave the cards to the back office, the runners. I said, process these, because at the time I had to write it in manually. And I actually walked out the building. The market opened at 8 is like 8:27. I've been trading 27 minutes and something like that. And I'm walking home, and they called me at home and said, well, we've finished processing all your trades, James, but we think we've had an input error, what we used to call an out trade, where because it was a manual typing in the trades, they put a mismatch in, which showed my P&L down, around £27,000. And they were used to me having a bad day of around £2,000, £3,000, right? So they figured that they typed in something with an extra 0 on the end, right, by accident. And I said, no, that's not an error. That's the actual problem.
Oh God.
Yeah. So it was just horrific. And there's we can talk more about what happened afterwards and how I dealt with it. But I guess one thing I wanted to sort of impart here is overconfidence in trading is just as bad as having a lot of fear. And I was so overconfident going into that day, both on my ability as a trader and on my ability to read the market, and that it was going to come off, that I was trying to force the market to do what the market was telling me.
Yeah.
It was doing something else.
So you lost the objectivity, and that was it.
I lost the objectivity. I lost I lost control of myself. Lost control. And by the way, I got out in the high of the day. It did end up going lower and closing lower on the day.
Of course it did.
So, but yeah, I lost the objectivity. I lost control of myself. I broke my own risk management rules, and it all just came down to overconfidence. And one thing, look, talking about overconfidence to a broad trading audience is a difficult thing to do, because most of the people aren't even in that position, right? They're struggling to get going, get money, but the point is this: when you do find yourself in that position,
I have a couple of traders who are there, so they are exceptionally good. They have really long profitable streaks, and I've literally just had an email by someone who they were funded by one of the prop trading companies, and they got super confident over a streak of, I think they had a streak of about 7 months or something, but then they made some bad trades thinking they can do no wrong, and now they've lost the account. So it's like,
yeah, I mean, look, it happens to all of us, and all the stuff that we'll talk about today, and all the stuff that your traders have heard you talk about and other traders talk about, what's important to remember is you don't overcome these challenges. What happens is you face them continually throughout your trading career. Hopefully you might face them less frequently because you are a better trader, but you still will not eradicate the stupid mistakes, the overconfidence, the losing control of yourself. The idea is as you become a better trader, you have better coping mechanisms on how to deal with it. I mean, you're human.
Actually, it's great that you say that, because in my previous episode, I was actually interviewing one of my market stalkers, and he, because I always say to people, don't worry if it was a muppety day, just shake it off and let's move on. And he liked that because over here in the UK, as we say, oh, what a muppet.
Yeah.
So he actually took that one step beyond, and he created something called the Muppet meter, and he was rating his Muppetiness on the day on a scale of 1 to 5.
Yeah, I like that. That's great. Yeah, whatever
So,
works, whatever gets you
yes,
through the day.
and it worked for him. It worked for him. He
Yeah.
was like, "Did I miss any trades? Was this obvious? Was it in my plan? Why didn't I trade it?" So and then he said, after a while, I stopped doing the Muppet meter because for a while it hasn't really happened. So I guess I have less Muppety moments. So no need for a Muppet meter.
Yeah. I mean, like, I've never had a Muppet meter. I like the idea of it. But, at the end of the day, when you think about it, it's a really great way of being able to sort of quantify how well you're trading. And when you know how well you're trading, you can understand the amount of risk that you can put on in the market, or whether you should be pulling back your risk from the market. So, obviously it's working for him, right? And it has a very, it has quite serious implications in your trading. So, yeah, I like it.
Absolutely. So let's now talk about your biggest winning day and how that affected you.
Yeah. So I guess the biggest winning day for me came actually after the floor closed. So I was a floor trader till around 99. And over the year around, I think it started early 99 and finished somewhere early into 2000. The floor closed. It transitioned from being an open outcry to a server-based matching engine exchange, an electronic exchange that we see today. And I made that transition during that period, and actually spent a year struggling making the transition from floor trader to screen-based trader, but thankfully was one of the few lucky ones that managed to successfully succeed in that transition, and actually went on to make more money on the screens than I did on the floor. My best day came about a year and a half. I struggled for about a year, about 9 months to a year, really making that transition. As we went into the end of the year, I'd started to gain enough traction to give myself confidence that it's worth continuing to pursue this and not leave trading. And as I went into my second year, started to do well, started to make good money. And I can't, to be honest, I can't remember the day, the date, or what part in that early 2000s it came. I want to say it was around 2001. It may have been into 2002. But what was happening, I was sitting in a big trading room, and there was a bunch of traders, and I'd actually had a pretty good day. I was up about £4,000 on the day, and it was late in the day, or late in the UK trading day. It was around somewhere between 4 and 5 p.m. I think. The market did close for a period of time. I can't remember. I think it was around it was in the afternoon. What I know is this. What I remember is the US had opened because it was a Fed move. It was a surprise Fed move that caused the European market to rally. And what happened was, I was kind of like sitting back, thinking, yeah, I've had a good day. I'm up about £4,000. I might call it a day. And somebody across the other side of the dealing room shouted, "Fed's cut rates." Now, back in the early 2000s, or up until the last sort of decade or so, the Fed would cut rates, or any central bank typically could cut rates between meetings. They did a poor job of communicating what their policy was to the market. So there was always these shocks and surprises. I don't know why the Fed cut rates. I suspect it may have been a reaction to, we were just coming off the dot-com bust. So, maybe they were trying to support the economy. I can't remember what it was, why they did it. But all I remember is this: someone shouted, "The Fed's cut rates." And of course, I'm trading European interest rates, so I know it's going to affect me. And if rates go down, the European interest rate contracts go up, futures contracts go up. So I leant over, and there was a big, I looked at my screen, and it was 32 bid at 33. It may be 32.5 bid at 33, but there was a lot on the offer at 33. There was a couple of thousand contracts, and immediately they started trading. So I jumped in and I grabbed 200. And my initial instinct was to put 200 in at 34, just to try and grab that tick. And as I went to do it, I paused, and the market, I just paused and thought, actually, this could go. And the market went 34 bid, 35 bid. And I thought to myself, I'm going to sell 34s if it comes back offered and take that profit. And as I was saying that to myself, the market's 37, 38 bid. I'm like, okay, I'm going to sell 37s, and it just went bid, and it got to 40 bid. And I thought, should I just sell 40s? And as I'm actually thinking this, it just went like 42, 44, 48, 56, 60. And I'm like, holy shit. I start shaking. It's like huge adrenaline rush. It's like rushes through me. I can remember my face like really hot and red. And it was gapping higher. And I knew that, I was trying to figure, I don't know how much they cut, but I was trying to figure out, look, it's US interest rates. I'm trading European interest rates, so it will affect. If they've cut 100 basis points, doesn't mean we're going to move 100 basis points. So, it went sort of 70 bid, no offers or something like that. So I'm like, 180. I just put it in. I was the only one that put an offer in the entire market. And someone traded with me, but they traded 67 lots. And then, so that what leaves me with 133 to get out of, but I had the partial fill left on the 33. So I'm trying to sort of get, try and sell 78, 76, and there's no bids. And that's when
no one's taking the trade. Yeah.
Started to fall away. It's topped out. So I just started hitting bids, trying to flatten my position. And I think the last like 11 or 12 lots I got back out at 62. So, I kind of sat back and I was like reaching over to check my P&L, shaking, and it was like £60,000 or £65,000, which is about $100,000, in the space of about 8 minutes, right? And I was like,
that's crazy, yeah.
Oh my God, I was just, my heart was beating, and it must have been around sort of 3 o'clock in the afternoon or 3:30 in the afternoon, because I remember thinking there's not much left of the trading session before they close the market now. I'm just going to stop. And I just stopped. And, obviously I walked out of that trading room, like high as a kite,
Oh, the dopamine rush.
And, it was just like, it was just an amazing feeling. But so that was my best day. And the sort of, what happened after that was like the next day I came in and I made £7,000, which was my second best day. And that was a function of like this sort of boost in confidence and this boost in like a belief that I could handle bigger size and bigger volatile markets. Obviously, there was a lot of volatility carried over into the next day, which created a lot of opportunity too. But I also had this huge boost in my trading account, right? So let's say I was sitting, I can't remember what my previous balance was, but let's say it's £20,000. I wouldn't want to risk more than £2,000 in a day, right? Because, we're all going to have losing days. You don't want to affect your trading account balance. We teach this all the time at TradeDay. But now, I had like 70, 80, £100,000 in my trading account. 10% was 10,000, or maybe I want to risk 5%, it's 5,000, which means I can go to try and make 5 to 10,000 a day. I can trade bigger positions.
Yes, you've scaled up effectively. You had one good day. Yeah.
And that was a big step from my growth doing this to doing like obviously on the P&L. Then my growth, now instead of trading, 200, when I took that 200 lot position, that was an outlandish size position for me at that point. My usual initiating trade was somewhere between 20 and 50. But I was so confident in the market was going up after someone shouted Fed's cut rates that, it was worth it. And what I could
So that's the knowledge of the implication of what's happened fundamentally and how the market needs to reprice itself. That's a very valuable thing to have as a skill. And that's what we see these days as well. I mean, now everybody's just raising rates. You need to know what to do. I prefer to trade any kind of Fed rate decisions the next day. Because that's the volatility and liquidity is still there, so you're going to get a lot more opportunities. Whereas I never really made big money on FOMC days. I'm going to say, in fact, one of my biggest losing days was FOMC when the market didn't fill me where I wanted to fill me, and I didn't put a stop because I was doing electronic trading, and I think this was back in 2014 maybe. Compared to the size of the account that I had, it wasn't a disaster, right? It was it was fine. It was like, it wasn't fine. It was about 10% of the account. It definitely wasn't fine, but everything happened so quickly for me. It was literally like, I don't know whether it was 2 minutes from the moment that my trade got filled, and I actually made a mistake. I had a fat finger mistake where instead of 10 lots, I put on like 100. The 0 on my keyboard got stuck because I had spilled some coffee on it. a while back, and yeah, and I didn't realize, like in the heat of the moment, I didn't realize that I put on a bigger position on. So before, like blink of an eye, before I could like get my head around it, the market just went against me, and I
Yeah.
literally lost 200 grand in the space of like, if I didn't have a heart attack then, I never will. So
Yeah.
but luckily, like I said, I had a pretty strong profit buffer, so
Yeah.
it didn't end my career or anything, but it was certainly a huge lesson that at times of great high impact events, that there might not be anyone to take your trade on the other side. So you had the
Yeah.
opposite problem. You were on the right side of the market, but you still had problems closing. Well, I
Yeah,
had the same thing,
exactly.
but on
Yeah.
the other side.
Yeah.
So it was
Yeah.
like,
The liquidity wasn't there. Yeah.
yeah.
Yeah. I mean, interesting that you touch on like the importance of understanding the fundamentals, because
Mhm.
we see a lot of TradeDay today is a retail facing platform, so there are a lot of retail traders coming on who are very, very, very focused on technical analysis,
Mm.
right? And they're looking for the answers in charts, and we have to try and teach them that the answers don't exist in charts.
Mm.
It's just part of a broader tool set that you need in order to become successful. And what we see is that usually we call them the four pillars of being a successful trader: technical analysis, fundamental analysis, trader or market psychology, and money and risk management. And you usually see, I think they're equally as important. Maybe money, risk management and trader psychology are the most important. But what we see is, retail traders, it is technical analysis first and foremost. Then some maybe have an understanding of risk management and trader psychology, and no one really cares about the fundamentals,
Mm.
And like yesterday was a classic example of why you need to understand the fundamentals. On the initial FOMC meeting release, we got a rally based on, it looked like some of the language was, maybe a little dovish, maybe a little bit what people are calling pivot-ish, right? Like they might be pivoting, but I mean, I'm looking at it up there, and I'm looking at it, I'm thinking, well, nothing's changed. In fact, in the last 2 days, we've had very hot jobs reports, the JOLTS and the ADP, and that basically means that the Fed's not going to change course. And I actually bought some out of the money S&P put options. And I mean, it was I felt like the risk reward was there.
Mhm.
I was a little nervous. I didn't commit too much capital because I'm like, well, actually, if that is the new stance of the Fed, then you don't fight the Fed, and I'm just going to lose money on these. So it was only a small position. But the next thing in the press conference is like, look, we don't think we've over tightened. We were slow to get going. They're like, nothing's changed, and all of a sudden they had to unprice all that. And if you understand that, then that not only is the market going to sell off, and of course it's sold off quicker than you could probably jump on it,
Yeah.
but that it's going to continue over the next few days, right? Because this rally has all been about the Fed possibly being done or going to signal some sort of pivot or some sort of dovish announcement at the meeting or in the press conference, that's going to sort of mean that, it's time to start getting into equities, and people were buying that ahead of it. And they didn't. They were like, no, nothing's changed.
It's very interesting to see some traders who come to me. I actually have people who are a bit opposite to that. They actually focus on fundamentals way too much instead of just focusing, because not all fundamentals matter. There are certain fundamentals that make a huge change in the underlying market conditions and the relationships of different asset classes. And you should know what these are. But then, some people kind of look at some minor releases and they're like, oh, but this release had come out. It really is. I'm like, it's nothing. It's like,
Yeah.
why? Or
Yeah.
they are focusing on the wrong product. So, for
Yeah.
example, crude
Yeah.
oil. I'm a crude oil trader. It always has like muted reactions to any kind of Fed and monetary policies in general, because
Yeah.
it's not really that affected. Like, yes, of course, it's affected by it, but not to that degree. A
Yeah.
lot more important for crude oil is what's happening with the supply of
Yeah.
crude oil in the biggest countries in the world and things like that. So people are like, oh, crude oil, we have to trade the NFP or something.
Right.
And I'm like,
No.
yeah, that's not really. I said, but
Yeah.
I'm going to exit my position. And I'm like, but why?
Yeah.
And then I kind of have to explain to them that certain fundamentals are not relevant for the product that they're
Yeah.
trading. And I was like, but if you're trading equities or gold, of course you have to look at that. They will go absolutely nuts for certain high impact releases. And then obviously the traders that I have, they actually come from very deep like economic backgrounds or financial backgrounds. A lot of them are engineers, so very, very highly skilled, bright people.
Yeah.
So I almost have to like pull them back from the fundamentals. And I
Yeah.
think my market stalkers are probably a little bit different than your average kind of trader or retail trader is kind of coming in and going, right, head and shoulders, I have to get in on that. So,
Yeah.
they already have a good feel about the order flow and market profile and things that focus more on market mechanics. But
Yeah.
I always say to people, I consider myself a systematic technical trader, but at the same time, 30% of my analysis is all macro.
Yeah.
Because I have to understand what is going on. And with Fed rate reports and stuff, it's all about the wording. It's always been about the wording. So whether they're taking anything away or adding something in, that's where everybody goes nuts. And I usually say, if you're doing if you're trading the FOMC, make sure that you trade after the press conference is done. So in that kind of last hour, because otherwise you're just going to get involved with all the algorithms battling it out, and there's no point. There's no point.
We experience a lot of traders blowing their accounts. Thankfully, a lot of our funded traders, have got to that point where they are a bit more cautious, and obviously because they're funded, they've obviously got the skills and things to get to a funded account that they know, like, it's a fool's errand to trade over FOMC, or in the preceding minute or two or 3, 4, 5 minutes. But we see a lot of new people on our platform going through evaluations or just on the simulated 14-day free trial, jumping straight in. And look, I get it. I completely get it. It's so
I get
exciting.
it. Yeah, I get it, because they think that's where the money is. That's what everybody online, or a lot of people online, they're like, news trading. Yes, yeah, there's a way to news trade, but you don't have to get involved in the first 4 minutes.
No,
it's like you'll be all right without that.
Yeah, it's crazy. I think, the thing to do, like on days like yesterday, is, digest what the fundamentals are. Have they changed from going into the day? And clearly they had during the press conference. What had been priced in had to be unpriced. And if that has, well, we know it's going to sell off. So my technicals that are telling me this is a good level of support, ignore it. Right? Because it's not going to hold here. The market needs to unprice everything that's priced in on the way up. So, it's important that you do understand the fundamentals.
Absolutely.
Have a good idea of it. How much you weigh that into your trading depends on you as a trader. Some big macro hedge fund long-term traders only trade fundamentals. Some day traders or systematic traders only trade technicals. But I think to be successful, particularly from a sitting at home, what I would call a manual discretionary trader. So you're not using an automated system. You're using your own discretion to make a trade. You should have a good understanding of the fundamentals, the technicals, obviously risk management, and the psychology of yourself and the market, what the market's trying to do.
And that's the whole thing about the risk model. It's not just risk management. There are many components to risk management, and every component is kind of like in a fine balance, working with other components. So if you have one part of your system that is not quite working properly, or statistically is like just not viable, that's going to affect your performance. So all the other stuff might be fine, but for example, your risk reward might be too low. You might be taking negative risk reward, and yet you are getting trades with like 50% accuracy, which is an awesome accuracy. But because of the statistically unviable target that a trader might be using, it's not working for them. So, it's all in this day and age of electronic trading, we do have many advantages to see all of this data just very, very clearly. So let's go back to your losing day, and how did you deal with the emotional aspect of your confidence being shaken up? Because I had to do that obviously as well, and I think it's a part of any serious trader's journey. So what happened after that?
Well, actually, it's a really, really good question. I'm glad you asked it, because there is, I think, a lot to learn, and I certainly draw on that experience, which when you talk about it, it almost triggers me, because it was so bad.
Sorry.
That's okay. But what happened was this. So, the next day I come back and I'm like, I've got a massive hole to dig out of. If I have a good day, which is $2,000 or £2,000, whatever, my average winning day, not average winning day, but a good winning day for me, £3,000, £4,000. If I have, 10 of those, I might get out of this hole. So it's time to start work. Right. And I went at it and bang, lost another £3,000. And then I came the next day and went at it again, bang, and lost another £3,000. And what I failed to realize was that on that big day when I lost I'd lost my trading confidence. Right. So I felt like, or I thought, my conscious mind was like, okay, I can do this, I can get out of this. But what I was failing to understand was, like, on my subconscious level, I'd massively hurt my trading confidence, and I'd, massively obviously ripped a hole in my trading account, which was putting me way under pressure, right? Mm-hmm. So I continued to trade like normal for the next couple of days after that big loss, and just experienced more losses and more frustration as I was trying to force trades, force opportunities in the market, trying to find ways to dig out of this, trading loss, which, rather than waiting for the market to present opportunities to me, the whole thing was a mess, kind of a complete, just goes to show you, how damaging those big days can be and why it's so important to protect yourself from them.
Yeah, they create psychological trauma. Like,
right.
You actually need some therapy after that to kind of deal with it.
And it goes to what you said, like right at the beginning, was like, how do you develop as a consistent trader? And it's, over the years, what you learn is that, it's not, you need to protect yourself somehow from these big losing days, because that's what hurts your consistency. But anyway, coming back to how I coped with it. So I didn't really, I was a mess. I was a mess for about 3-4 weeks. There were days where I wouldn't go into work. I was self-employed, I was funded, but, kind of self-employed. So no one was telling me I had to be in, earn a salary. There's days I didn't go into work. There's days I was in the pit. I just couldn't make money. I was just a miserable old git, really. And in fact, what was happening, I was sitting on a step outside of the trading pit. So you have the big trading floor, you have the banks of brokers, and you have the trading pits in the middle. I was sitting on a step walking up to the banks of the brokers and just being miserable, like just thinking it was over, and like I didn't know what to do, didn't know how to get out of it. And a guy called Ricky Ossaway, who was the floor manager for the clearing firm that I was clearing through, saw me, and he came over and said, "What's up, James?" And I'm like, I can't trade anymore, Ricky. I just don't know how to, what to do. Every time I go in there, I lose £1,000. He's just, I just can't add to these losses anymore. I'm thinking about quitting. He goes, "Do you want 20 quid?" And I was like, "What?" He goes, "I'll give you 20 quid. Do you want it?" And I said, "Yeah, of course I'll take 20 quid. He goes, "All right then, well, I won't give you 20 quid, but why don't you do this? Why don't you go back in that pit, stand there, see if you can scratch a one lot, or see if you can try and make one tick out of a one lot. Just do that once or twice for the rest of the afternoon and come and find me." And that's exactly what I did. I went in there and I made, I can't remember, let's say it's 30, 40 quid or whatever it was. I was nothing that's going to help me dig out of this financial hole, right? But that wasn't the point. What the point was, is he wanted me to show myself that I was capable of making money trading. Not the amount of money, that I was just capable of being successful trading, focusing on the process of trading, not the outcome, right? And, Ricky, God bless him, I don't know if he was thinking like that, or it was just like someone told him that's what, once that's how you get out, just cut your size back. But, like when you analyze it, that's exactly what was going on, was he was trying to shift my thinking from the outcome to the process. And, I went out of the pit and I was like, he goes, "How do you do?" I was like, "I made 50 quid. He goes, "Yeah, exactly. Come back tomorrow and try and make another 50. And then come and see me." So I came back the next day, I tried to make another 50. Now I'm £100 up over those 2 days. Again, nothing that's going to help me with the massive hole that I've built in my trading account, but 2 days of trading confidence. And he goes, "Now go and do it with 2 lots. And then when you've got a couple of days under your belt making money 2 lots, go to 5 lots. And then, and then go to 10 lots. So, hey, and if you struggle at 10, go back to doing 5s. And then when you get comfortable, go back to 10s and build up from there." And it was amazing. That was the start of my recovery.
Mm.
And, you know, for the next sort of month and a half, I probably got a quarter of my losses back.
Mm-hmm.
But for the 2 weeks after that, I got the whole lot back, because that journey of rebuild. So here's just a sidestep here. Digress. What you hear with a lot of traders is, you know, I'm a 10 lot trader, or I'm a 20 lot trader, I'm a 50 lot trader, and you're like, they lose money, say, all right, go back to trade 1 and 2s. I'm not a 1 and 2 lot trader, I'm a 50 lot trader. I'll never make my losses back. You know, they don't want to go back and try. And I get it, because it took them 2 years to go from a 1 lot trader to a 50 lot trader, right? And that's not what's going to happen here. You go back to 1, you get your confidence back, you start scaling up, but scaling from 1 to 50 is not going to take you 2 years again, because you've already done that. You've already gone through
it. You already have the skills, and you know what to do. You've done it
exactly.
already.
You can be back there in 3, 4, 5 weeks.
So it's not going to be forever.
Yeah, and that's exactly what happened. You know, it was a very slow, small dig for the first few weeks, 3 weeks, 4 weeks, going into the next month. But then I'd hit my stride, and I was able to increase my size, start hitting £2,000-3,000 a day, you know, and then all of a sudden I'm digging my way out of my loss. And you know what? Becoming a better trader. And that definitely reflected. I went on to sort of trade bigger and better after that. And I think it was that just sinking into your subconscious, that acquisition of skill and that acquisition of understanding how to recover from big losses, the mistake that I'd made last time, what I can do to avoid that, and knowing when I do find myself in problem, I can get out of it. And all that, you know, put it into the mix, like made me feel like I'm just a much better trader. And I went on obviously to do even better than I had, you know, previous to that. So kind of like that's how I recovered. And I think, you know, it's a really, really difficult thing to do and to explain to traders that when they have big losses, you know, stop trading 1 lot NASDAQ, go and trade 1 lot micro NASDAQ. You know, oh, I'm never going to make my losses back. Well, that's not what this is about.
That's not the point. Yeah, that's incredibly useful, because I have people who, just to give you an example, there's someone who is going through my coaching right now, and he's an excellent trader. But he said to me, "Oh yeah, I mean, I'm using." He was on a 50K challenge, and he was using $600 to $700 per trade. And I was like, "Wow!" And he's like, "Oh, it's going really well." And I'm like, "Yeah, yeah, until it doesn't, and then what?" So then we kind of had a little chat, and I said, "You know what? You might want to scale down, because it's not really the point to get there the fastest. The point is whether you can sustain the performance for endless amounts of time."
Yeah.
For however long you decide to trade for, right? So using massive, humongous positions, and he comes from somebody from a background where he was making a lot of money at one point, and now he wants to quickly get back to that. But that's not how you do it. You still have to work within the parameters of whatever the challenge gives you. It's easy to scale up, but just make sure you don't get yourself when things are easy, when everything's going well.
Yeah.
It's all like, oh, wonderful. But the tough times come when you get yourself into that drawdown, and that hole gets deeper and deeper. And every day is almost like filled with dread, because you come to trade and you can't do it.
Yeah.
So I went through the same thing after my loss, because, you have to walk into that office where, I had 30 other people on the floor, and everybody knew, because it was one of those companies where they were doing mark to market every day. So they have to list everybody's positions. And, we know who's making money, who's not. And that was one of my probably only bigger losses that I've ever had. So suddenly I went from being this incredible trader to a muppet who lost 200 grand yesterday on the efforts. It was like, never mind the lack of confidence, it was embarrassing,
Right.
So you have to almost kind of go through that whole thing and walk through the office with your head down and drag yourself out psychologically to be like the stronger person, and to kind of pretend that you're okay, but you're really not for a while. And I think with me, it took me about 2-3 months. It took me 2-3 months, and I did the same thing. I went down to 1 lot, because there was no micro contracts back then. It was all just full. So and I did it bit by bit. I limited the number of trades that I was doing to 1, just 1 a day. So it's like quality over quantity. If I can make money, any kind of money, just with one contract on a one trade per day, amazing. And it took me a while, but again, very quickly I was back to where I was 2 months before. So very similar stories. It's so funny to hear you talk. That I think that everybody who's in this game for long enough, we all have to go through those little rites of passage and grow as people.
Yeah, definitely. Can I ask you, Dee, because I sometimes wonder about this, like walking back onto that trading floor, right? Everyone knows your losses, whether it's published or not, everyone knows, right? Because they, the way you sort of, in the trading rooms I was in, the way that losing traders would vocalize, that they were in trouble. And then sometimes physically dragged off the floor by risk managers, they had a terrible
or
day.
screaming in the bathrooms we had. Yeah.
I mean, it must be really hard, like, for your ego, right? Like walking back on. I mean, I remember like I felt humiliated walking into the pit, and that really doesn't help, right? Because you're trying to fight that. And I wonder, like, for traders at home, if there is a bet, that's one of the advantages at home, that no one's facing, no one knows about your losses.
Well, no one knows about your losses, but your spouse will eventually find out.
True,
I can imagine. So that must be even worse, because this is somebody you live with. A lot of people have kids and stuff, and the mortgages to pay and everything, and then to walk back into the room and to face your loved one. I know I had to do that. We don't have children; we just have dogs. Well, I suppose children of a different species, I guess. But yeah, I know that it was actually very difficult for me to come home and to actually fess up to my husband that I had lost all that cash. And, it was the difficult.
Why did you do it? Why did you do it? That's the question.
Why did you do it? I was like, no, I don't know. It's like, it happened. There's nothing. And I remember I actually called him and I said, I'm... It's so stupid now that I think about it. But I called him and I said, I have something horrible to tell you before I come home. I really need you to know I lost a lot of money today. So I'll understand if you want me to move out. And he went. How much did you lose? So I said, over 200 grand. And he said, right. Well, just come home, because it sounds like you can't afford a hotel anyways.
That's a great answer. That is a great answer.
So I knew he was a keeper there and then. I was like, okay, let's come home.
That's a great answer. I met my wife in '99, and she was on the floor, and she was a partner in a brokerage group, and then when the floor closed, she transitioned to trading and traded for 9 years. So for those 9 years, we were dating for a few years and then married in 2003. But for the 9 years, she was trading until she had our first child. That, it was kind of a situation whereby 25% of the time, well, not 25% of the time, but like one section of the time, it was great in our house because we were both making money. One section, it was okay because I was making money and she was losing money. The other section, it was okay because she was making money and I was losing money. And then there'd be times when it would be just miserable in our house because we were both losing money.
I always wondered what it would be like to live with a trader, because my husband he's not a trader, he's a software developer. Really,
but it's great. I gotta tell you, ultimately it's great because when you go through, in all seriousness, the things that you go through as a trader, incredibly difficult for a non-trader to understand. And and I think that's why you have these talks, right, with traders, these interviews, right, because we want to share our experience. And and I think it is a difficult. I imagine, I've never been a spouse of I've never been a non-trading spouse of a trader, so I don't know. But I imagine it can be very difficult for the spouse of a trader, and very difficult for the trader, to sort of really continually express what they're going through and their feelings and their frustrations to somebody who hasn't experienced it.
See, I was never able to talk to my better half about my trading, because A, it doesn't interest him. And B, when I start waffling on talking shop, he just wouldn't know what I was talking about. So he would be like, oh God, not again. So I was actually pretty lonely in that regard. And I wanted to talk to you about a couple of other things, but actually one of the things that has changed drastically in the prop trading world is the fact that now we don't have offices anymore. So since COVID, everybody's gone remote. We have these prop trading companies, cropping up everywhere. You guys are obviously obviously one of the really good ones because you are very reputable. You actually fund people with live money. You have some rules that really make sense. And I can totally see why, because you are from that world, because you know how to help people as well. But one thing that I do miss is ultimately going into the office, having that environment of other like-minded people to talk to. And in many ways, it was one of the reasons why I started the YouTube channel, because I felt very lonely. I was like, started trading remotely, and suddenly, yes, I have a risk manager on the internal messaging system, but they're not, they're not really. And I don't know, somehow it just didn't feel the same to me. So I felt that I've lost some of that companionship, I suppose, and even some friendships that I developed in that world.
Of course,
Now, in your opinion, what are some of the positives and some of the negatives to this whole change in the prop trading world?
That's a good question. I think, I could tell you, like, one of the big positives when it went from floor to screen, well, a couple of them. First of all, my wife, because she was on the floor and then found herself on the screen, she hated the floor. We both have good friends from the floor. It's not to say we hate the people, but she hated that environment, right? She was a Bund filled paper as a broker in the Bund pit. And there were, I can't remember, but maybe 250 people in that Bund pit, of which 5 were women, and you're absolutely crammed in, so people are spitting in your hair and stuff, it's like, it's an awful environment to work. So, one of the positives of the floor closing for my wife was like, I don't have to deal with that anymore, right? The other great thing was that there was, a lot of, not a lot, but there's some shadiness with what people were doing, looking after each other and stopping each other out and things, and all that went away. Now it's an even playing field on the screens. But in terms of like the transition from office-based prop trading to home-based prop trading, it's a really good question. I can immediately see lots of downsides, and really that is to do with the camaraderie, the ad hoc or simple mentoring, or somebody just being able to put your thought process straight very quickly, when you're actually in a trading room. And like, as a risk manager as well, when I walk onto a trading room, when I was managing the trading in Shanghai, I didn't even have to look at the trading screen, the risk management platform, to find out who was making money and who was losing money. I could just come back from lunch, walk across that trading room floor, and I can guarantee the people that were focused, people who focused on their screens were probably doing pretty good. And the person that I would call meerkatting, which would be like, so up, looking up over their screens, looking at me like with a panic look on their face, it was a sure sign for me to check their P&L when I went back to their seat, So like that, very much that like connection to the trading. And as things get busy, you can hear the herd, like people banging their desk. Okay, the market's rallying, that means everyone's short. That type of thing from a risk manager's point of view, I miss. From a trader's point of view, it's very hard to just one word or one sentence mentor. Which you'd be able to sort of put your hand on someone's shoulder. Hey, you've had a really good morning. You start to give it back. Why don't you just go and have a walk around the block, take a break? You can't do that when you're at home, sort of thing. So there is that element to it. What are the benefits from trading from home? It's really hard for me to say. When I thought I wanted to do something in this space, that it was partly motivated by the pandemic. I was trading from home. I was no longer working in an office with colleagues. I found it lonely, and I'm like, how can I try and bring some of the advantages that we had as professional traders to the trader at home? But essentially, I think that's why Discord groups are very popular these days, because they're like a virtual trading room where people can banter and vent their frustrations and things. And so it's a really good question. I haven't really given it much thought, other than that's the new norm, and we've got to learn to deal with it and adapt. Certainly throughout my career, there have been some huge structural changes in trading. One the significant one was when the floor closed and it went to electronic. Around sort of the running up into the financial crisis and post-financial crisis, a lot of the manual point-and-click trading that we were doing was automated away by the high-frequency trading shops. So you had to learn to evolve again. And successful, consistent trading over many, many years is a period of evolution. I talk to traders a lot, and they talk about how they're just looking for that one thing, or if I can just refine my trading strategy and my my technical strategy, then I'm sure I can just make money. I'm like, well, maybe for the next couple of months.
You see that the issue that
Things are
I
going to
have
change,
with such simplistic thinking is that in the context, like even when you have a good reversal level, for example, it works. Like for me, a real eye opener was average daily ranges. So some of my entries were vastly improved when I started using that. So rather than suffering like a 50% drawdown into my position, I suddenly was able to find a better way and better timing to my entries. So that was very transformative. But at the same time, no level means the same thing in a different context. So even something like average daily range, it's ultimately a measure of volatility. So if you have a day when the market is going crazy and going through those averages, that average range means nothing. But you have to understand it contextually why that's happening. And similarly, something like distribution curves. We all know that from the outside, distribution curves like value area for market profile, they can be reactive. But if the distribution curve is really close by from when the market opens, it's very likely you're going to get the market going through it and totally ignoring it. So the whole simplistic point of people just going A plus B equals C, it's just not how trading is. You have to be very flexible, and you have to understand the entire market narrative on that day. And I think that's kind of been lost a little bit as well with the electronic trading.
Yeah, definitely. I mean, as I said, it is a period of evolution you're trading, right? And successful trading is a journey of evolution. That's what I really meant to say. And I think that the fact that a lot of traders are now trading from home, it's just part of that evolution. Like, this is the new world order, deal with it, but I think for a lot of, certainly my audience now at TradeDay, they're already traders at home, right? They didn't have the opportunity to trade in trading rooms. And I think, one of the great things that's happened in the last sort of 5 to 10 years has been this democratizing of market access through retail trading platforms. I mean, I was shocked, absolutely shocked, when I started getting into this space in 2020 at how sophisticated some of the front-end trading platforms are. TradeView, we use TradeView. It has full chart packages. It has automated trading, automated order execution, like which you can finesse. Like lots of different tools, and like Ninja has an amazing suite of community indicators that are built, and it's just crazy the amount of information. In fact, it's too much, to be honest. But nevertheless, it's kind of like access is for anybody now, right? Access to these markets for anybody. The platforms are performant and they're high performant. As long as you understand which area of the market you're trading in, don't trade sort of like try and trade at high frequency, low latency, because you can't compete in time or cost. But in terms of market access, you just need a laptop and an internet connection, and
from anywhere.
From anywhere, and what we're trying to do a little bit is to try and bring that trading room to the trader as well. So we have a daily meeting where we go over the fundamentals and the technicals. We have market research, which you'd be delivered in a trading group, and we have a live market commentary that runs 24 hours. So we're trying to create that connection to a trading room. We have a chat activity and forums where you can ask questions, so we can give that mentoring. And that was the idea of like TradeDay, try and build this sort of environment to help the traders find their edge. But it is a lonely life trading from home. You can't get around that.
Yeah. You mentioned some mentors that have helped you earlier in your trading career. So why don't we talk about that? I know that you've been a risk manager and you've been a mentor, and you are still a mentor for TradeDay. But when you were starting out, can you think of some mentors that were really helpful to you?
Yeah, I mean, the person that backed me initially has got a gentleman called Guidon Hirschton, and for those who are in the professional trading world know him. He's a FIA Hall of Famer. He is the brother-in-law of Ray Carman. Ray Carman owns Transmarket, which is a big, huge trading group here in Chicago. Gideon's the owner of GH Financials, which is a global clearing firm now that he started. I was one of the first employees. I was one of the first traders he backed in '94 for that firm. And he also owns Mercury Derivatives, which was one of the world's largest proprietary trading groups, day trading groups. So, industry titan. He was a trader through the 70s and 80s. And as we rolled into the 90s, he decided he wanted to build a set of companies. And I was fortunate enough to be one of the first into those companies. I was one of the first people he backed as a trader. And that was in '94. I think GHF was established in '93. And so I had access to Gideon, right? A trader that had been trading for 20 years at that point, who was extremely successful. And, he was an excellent mentor for me. Now, mentoring can take on lots of different forms. It's not like we sat down every week for hours and discussed the markets. Sometimes I wouldn't speak to him for months, and it would just be a passing comment in the hallway or something that just get my thinking straight. Sometimes it would be more in depth, like when I was struggling from making the transition from floor trader to screen-based trader. As I said earlier on, about 9 months of sort of like really finding it difficult and losing money. And I was about to give up again then. And Gideon said, look, I think you're just, you can see the skill acquisition, you're turning the corner. Let me refinance you and see how we go. And that changed the course of my life. And of course, a story for another time. I went on to manage proprietary trading groups in China, and Gideon was the one that offered me that job. So he's like, outside my immediate family, the one individual that had the biggest influence on the course of my life. So I was very fortunate to have someone like that as a mentor. There are other people along the way that have helped me. Notably, obviously, Ricky Oxaway. I don't even know if Ricky's still alive because this is in the mid-90s, right? And he was an old guy then, and I was in my 20s. But he was the guy that, helped me out of that sort of that after that really big losing day. Steve Ward's somebody that I've worked with and he works for us with TradeDay now.
Yeah, I saw, yeah.
Coach. And we ended up hiring him at Mercury and having him develop management training programs and trader development programs for our traders. And and I think in the role of a mentor, I think Steve's fantastic. And he's over the years I've sort of turned to him occasionally, said, Steve, I've got a few problems, can you help me here? And he's very strong from the psychological side, right? Not necessarily from the technical side, but more on your psychology and sort of how to get that right.
It's almost like he definitely is that performance coach. So he helps you to be the best that you can be, or deal with your issues. Yeah. So do you think that having mentors might expedite the process to profitability?
Yeah, absolutely, 100%. I think the part of the problem with today, one of the great things today is the internet has an absolute ton of resources. Part of the problem is knowing what's any good, right? Because not half of it, the majority of it is crap. I'm sorry, but some of the stuff that comes up in my feed, it's unbelievable. It's just, there's a lot of garbage out there.
Yeah.
So if you can find a mentor that, has a track record, has a verifiable experience and is accessible to you, then I think that's worth its weight in gold, because they will help you cut through a lot of the nonsense that you're being bombarded with and say, look, don't listen to that. This is the way it is, and I think that can save you a lot of time. And ultimately, while it might cost you a little bit of money in the beginning, it can save you a lot more money in the long run.
Yeah, that's a very good point. When I went into prop trading, I was already trading for about 4 or 5 years. So I was just an independent trader, started at home. I came from a music background, so nothing to do with finance. And for the first year, when I decided to go down to the intraday time frame, I wanted to be a day trader. It wasn't going well. I spent 12 months just not really making money. And I was like, no, I'm not going back to swing trading, because at the time we had European austerity measures kicking in. Forex was being locked in with all the low interest rates. And what was working for me as a swing trader back in the day just suddenly stopped working. So I knew my skills had to grow. But when I was just on my own in my house, I didn't know what to do, because I was like, well, for a year I've been trying and it's just not working. But as soon as I got to a prop trading company, because I went for a prop trading apprenticeship, and immediately in the first week, they moved us away from Forex. They moved us on to commodities markets, equities markets. I mean, I was so green, I didn't even know what ES was.
Yeah.
And they were like, you're going to be trading ES. And I'm like, what
What's
now?
that?
Yeah. But it was an eye-opener. And very quickly, I started learning about the market mechanics, about order flow, about how supply and demand is properly working on that intraday time frame. And I don't know if I've ever would have made it if I hadn't gone to that apprenticeship. And if I just went, no, I'm not going to pay anything to anyone. I'm just staying here and I'll make it. It would probably be another decade. So maybe now, at this point, maybe I would have found a way, but it certainly wouldn't have been as quick as it was, because within like 4 or 5 months of being in that environment and hearing the people around me discuss setups and being able to ask people as well, because one of my risk managers, he was an amazing profile trader. So I was like, well, does this work? And does this work? What about this level? What if I use it this way? Like, I was probably bombarding him with like a million questions a day, but he kept answering, and it helped me to no end. So I definitely agree with you that if you can have an access to a mentor that knows what they're talking about, it's totally invaluable. Definitely invaluable.
It's interesting you say you come from a music background. I mean, if someone's learning to play guitar, you can figure out get so far on the internet watching YouTube videos or downloading the Fender app, which is what I attempted to get started with. And but at some point you need a guitar teacher to set you right and break those bad habits, and only then do you start really accelerating and acquiring the skills.
Exactly. And I think trading is a performance discipline anyway, so it has a lot of parallels with both sports and with music. All right, James. So we have some time for one last question. Then we'll let you go.
I hope people aren't bored. Or like,
no, not at all. Not at all. Now you said you've built large prop trading desks around the world, so you've been doing that for a number of years. How would that compare to building TradeDay? Is it harder, easier?
TradeDay is harder, without a doubt. I mean,
really?
And I tell you why. Because my experience of building prop trading groups have been with walking in or joining an existing company, right, rather than building something from scratch. So Mercury Derivatives was the company I joined in 2010, and I was moved to Shanghai to manage the trading there. And I lived in Shanghai for 4 years and took over the trading in Shanghai and Beijing. Eventually, I was head of China as a region, which meant the trading and operations. And then I opened a third office for them in a city called Wuhan, which until 2020, no one had ever heard of outside China, right? So, I have experience of finding everything from finding office space and looking for office space that doesn't have big pillars in the middle of the floors, because we want a nice open trading room that we can communicate across our desks at each other. Everything from that to building the infrastructure. But I had a full IT support team putting in the network and building out the trading stations and the platforms and the PCs and the servers and things like that. So it was more like managing the build of a trading group rather than actually rolling up my sleeves and building it myself. Whereas TradeDay, if the printer doesn't work, it's like, oh my God, how do I go onto Google? How do I fix my printer? It's like,
you're always on support as well. Like, I was so shocked to see that, because I think I kicked off support for one of the affiliate things, and then you personally responded. I was like,
Steve and I are trying to do as much support as possible because we want to know what pain points our customers are having and how we can evolve the business. Obviously, as we get bigger in scale, it's going to be a lot harder for us, and we obviously don't want it to interrupt where we can bring value to the company, which is on the training and the mentoring and the guidance side. But so like TradeDay, in all seriousness, what the genesis of the idea is around sort of between March and June 2020, right? Right as COVID rolled into town, I lost my job. I had nothing but time, wanted to do something on my own, figuring people other people have nothing but time, looking for opportunity, and and how can I sort of service that on the trading side. And it taught myself how to build a website, and built the website myself, and everything from understanding colors and fonts and how they play a part in building the website that how I want it to look and things. So it's been a whole sort of journey of learning new things, and it is very frustrating when you're starting a company and you're bootstrapping it, where you can't. I would love to have like 5 really competent trading developers. You know how much a really competent trading developer is? It's like north of $250,000
Oh,
a
yes.
year.
Oh, yeah. I know. I've got 3 of them. Yeah.
So it's like, I can't. So you find ways around it, and you find like fractional CTOs and fractional development companies and things like that. So, but it's all out of my core competency, which is trading, right, and understanding trading. So it's a lot, and it has been a lot, and it's, as I said, it takes it away from my core competency. It's been, at times 16 hours a day, 7 days a week. Like, it's not always 16 hours a day, of course, but it generally is 7 days a week, more or less, because at weekends, that's the time where I can sort of move projects forward, where during the week it's like the day-to-day operations and things. But I've got a good team around me. My partner Steve, he does an awful lot. He's based in the UK. Tara really helps us from the trading management side, and we have like third-party advertising agencies and development teams and things like that. They're all sort of piling in, but need managing. Yeah. So they all have their different, building a physical trading room and trading infrastructure poses different challenges. But it typically, I did some of that at Clear Capital Group, and I joined Clear Capital Group. We didn't start Clear Capital Group; it already existed. So it had budgets, it had an IT department, etc., that I could lean on. So
yeah, there's a lot of stuff with building a company that people don't really realize. Everybody thinks, even with any kind of trading education, people say to me, well, why don't you just release another course? Well, it takes me 18 months to create one course. It's so much stuff. And then once you do the course, there's the editing to do, and there's marketing to do, and you have to come up with messages. You have to, like, it's not trivial at all. So I totally get where you're coming from. James, thank you so much for taking the time to talk to me. As always, like I said, lots and lots of gold nuggets to take away. I'm going to remind our viewers that TradeDay is one of the only 3 companies around that actually puts the traders into the live markets, whilst you get funded, obviously. Now, TradeDay also has very, very sensible rules. So feel free to check out the previous interview that I did with both James and with Steve, who's the other co-founder. I'm going to put a link to the video somewhere here, so you can check that out. So make sure you like and subscribe to the channel. So thank you for watching, and I'm going to see you all next time.
Thank you, Dee. Thank you.